Hello, and welcome to Portfolio Matters. In today's worst trade, we will be talking about a disastrous trade of my own where I talked to the management and I believed them and I suspended all my usual skepticism, and it cost me a lot of money. So before we get into it, Richard will read the disclaimer.
Thank you, Keith. And can I just point out that today's worst trade doesn't mean that we have a worst trade every day. It just means the one that we're sharing with you today.
We probably could do one every day, Richard.
Yeah. So, moving on to the disclaimer. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. So tell us about your worst trade today, Keith.
Yes. Okay, so we have got quite a lot of feedback on various of our share talks about how we should talk to management because, they'll explain what we're missing. And the thing is, I have learned to my cost that sometimes management are not the best people to talk to because by definition, they are true believers in their company and their project. And they will always see the prospects of the company in the best possible light. And Hurricane Energy was a small UK oil company where I went along to the AGM. I was on the chat rooms. I spoke to the CEO. Several years I attended the AGM, and this was a complex story. And he explained it to me in person, some of it, and I believed him and I believed in his story. And as a result, I suspended my critical faculties when the share price came off. And as a result, I went from being a massive winner on this stock to a loser. And although my ultimate losses weren't enormous, my lost profits really quite were, frankly. If I'd sold when I could have done, I would have made a lot of money. As it was, I lost money. So anyway, in summary, the conclusions from this my worst trade are going to be, you always need to keep your critical faculties alert and be wary of just listening to the management story. I think it's really important to listen to skeptical voices. Now, one of the problems we have is that generally the best way to find out about information is that, attending the chat rooms. And the chat rooms have some people who are really very knowledgeable about companies. In the case of Hurricane Energy, there are some people who really knew their stuff. The trouble was that anyone who raised a negative voice was treated either as a troll or as a deramper, whatever that is, and shouted down. And when you attended the chat rooms, there was just a relentless stream of positive advice, and any bad news was treated as though it was a temporary phenomenon. The other thing is, I let the tax situation guide my investment decision, in that when I sold all my oil companies in September, October 2018, I didn't sell Hurricane Energy because I didn't want to crystallize a huge capital gain. Well, I needn't have worried about that because ultimately I didn't have one. The other thing is, attending AGMs is just a complete waste of time, frankly. The only thing you're going to find at AGMs is the management telling you the positive story. They can't tell you anything that is not already in the public domain. They can clarify things, but in my experience, that the time spent attending them is not my time well spent. And above all, if you've got a winner and you've made a lot of money and it starts to turn down, even if you completely believe the story and it's going to go much higher, just sell enough to get your money out. You know, if I just sold, because the thing is, at its peak, I was up something like 3 or 4-fold on this investment. If I just sold a quarter at the top, I would have recouped my investment, and then who cares what happens to it, frankly. So this is the sorry tale of my investments in Hurricane Energy. I started buying in 2016 before all the good news, and the good news sent the share price up to over 64p. And at that stage, I've made a lot of money. Sadly, I believed the story and I hung on to the bitter end. And the bitter end was quite bitter. And I eventually sold it for 3.1p, having turned a 4-fold profit into a 75% loss, which requires some talent, I think you'll agree. So what was Hurricane Energy? Well, Hurricane Energy was a small British oil company set up by Dr. Robert Trice, who was a specialist in fractured basement oil fields. Now, most of the oil fields around the world, the oil is trapped in the pores of sandstone. Fractured basements are different. They're much rarer, and the oil is actually held in cracks in granite. So the granite is impermeable and the oil is held in cracks in the granite. Now, there are a few fractured basement oil fields around the world being successfully produced. However, they have a reputation for being difficult to model and therefore unreliable, that the estimates of the oil in place can be wildly off and they can disappoint. And I was aware of this. This is their plans as of 2015. They were going to explore west of Shetland in the Rona Ridge. And they had a successful drilling campaign in 2016 and 2017, where they claim to have found an enormous oil field, Lancaster, the largest oil field found in the UK since the 1970s. And this was big. So the P50 recoverable resource, so the most likely probability 50%, 593 million barrels. That is a lot. Now, if they were guiding for OPEX, operating expenditures around $22 a barrel, at $60 a barrel, that means the cash flow from Lancaster was worth 22.5 billion. That is a lot of money. That's a big field. Plus, they had other ones. They had Halifax, Whirlwind, etc. So there was a lot of excitement about the shares. One thing that they raised early on, so prior to actually the production coming online, was the question of water. And they were aware that people were worried about water production from the fractured basement, but they were saying this wouldn't be a problem. And in 2018, this was the guidance. And you can see that they had enormous prospective resources. In total, they had contingent resources of 2.5 billion. So at $60 a barrel, I mean, that's worth a lot. This could have been one of the largest oil companies in the UK, just on the basis of these few oil fields in the Rona Ridge, which were enormous. And then they did the first few wells. And we're always aware that we would discover how big these oil fields really were when the field has been producing for a little while. But you see here, their estimate of the oil in place was enormous, and this is where they estimated the oil water contact to be. So way lower than where the wells were. So they should not have been encountering any water at all, but they were. Now, Dr. Trice had an explanation for this. And his explanation was that this was perched water, that there are these pockets of water trapped in the granite and the wells were encountering them and some water was coming up, but it was nothing to worry about. So you see here, initially you get the oil coming through, and then as you've depleted the oil from the nearby fractures, so you'd get these surges of water. But everything they were seeing was due to perched water. I mean, he was a world expert in fractured basements, so I believed him. I went to the AGMs, I talked to him, I looked him in the eye, and frankly, I became a believer in this company. And in the July 2019 presentation, they were guiding that by 2025, this was going to be big, over 120,000 barrels produced per day, and the share price was about 43p. But, you know, at that stage, the shares looked amazing value compared to the size of the resource. And so I was very happy to keep holding them. Now, there were several updates talking about the perched water. And Dr. Trice was always emollient. And then in June 2020, there was the announcement that he was going to resign and a new technical analysis of Lancaster could be commissioned. Now, at this stage, I thought, this is bad. You know, this isn't great. But I mean, really, how bad can it be? They've got a resource of 2.3 billion. I mean, okay, they do a technical, new technical analysis. What? Worst case, they halve it. You know, it's still huge. And compared to the market capitalization of Hurricane, I mean, the shares still look good value to me. So I held on. But the bottom line is, it was worse than I could possibly imagine. The new technical report downgraded the Lancaster proven and contingent reserves from 2.3 billion in 2017 to 200 million. And that's proven and contingent. And they were talking then about having produced 6.5 million, but actually the whole well being able to produce a maximum of possibly 20 million, in which case, given all the costs, it was unclear whether actually this company was worth much at all. It was ever going to pay back all the debt, etc., that had taken on to drill these wells, and whether it was worth drilling further wells in Lancaster. And the shares fell to 3.6p. In fact, they fell further than that. They fell to below 3p. The thing is, when the share prices came off, you know, I sold all my oil companies back here and I held on. And then the thing is, so this is bad news, but a lot of the fall in the share price accompanied COVID-19 and the fall in the oil price. And I confused the two, thinking that it was just coming off with the oil price. And frankly, I wasn't paying actually too much attention until, and I continue to believe that the revision to the Lancaster technical review could not possibly be anywhere near as bad as it was. And that cost me a lot of money. So, in summary, beware of management. I met Dr. Trice, I listened to him, I liked him, he answered my questions, he seemed a very competent man. But the reality is, he was a true believer in his project. And when the data changed, he didn't change his mind. He continued to interpret all the data to fit his thesis. And online, there are people, poo-pooing the prospects of hurricane, but I didn't listen to them because, frankly, they was on the chat rooms, and it's a very adversarial, shouty platform where people treat each other, frankly, with contempt, as though the people who are saying that the story may well not be true were doing so in a very aggressive manner, and there was no forum for objectively discussing the prospects of the company. So anyway, if I had paid more attention, if I had listened to the skeptics and not just completely believed management, I could have saved myself a lot of money. Above all, if I'd just taken a bit of money off the table when things were going well, this would have been a disappointment rather than my worst trade. Richard.
Well, thank you very much, Keith. Thank you for bearing your heart, your soul here in terms of what went wrong and how you made your mistakes. A couple of comments really. We do sometimes we do our reviews of our share talks, and we get people saying you need to talk to management. You need to talk to management. And as you say, management may be able to explain something, but they can't tell us anything, any price-sensitive information, without committing a criminal offence, unless they tell all share, in fact, the entire market at the same time. So it's really very difficult to talk to management and get anything other than what is already out there. And the second point I would like to make is that, and I made it on Thursday with our weekly update, that if you read George Soros, one of the things he says is most important is not talking to people who agree with him, but talking to people who disagree with him, because then he understands where he's got it wrong. And if you are investing in these companies, it's more important, I believe, to talk to people who disagree with you and work out seriously why you think they're wrong, and have an open mind to the fact that you may be wrong, one may be wrong.
Yes.
And that's really important. And I think the third point, which is something we all struggle with, is if you have a share that has made a profit, when do you sell it? That's a really difficult decision to make. And it's very easy in hindsight, to identify where you should have sold it. But at the time, you have two conflicting emotions. You have the emotion of not wanting to give up a potential gain, and the emotion of not wanting to lose the gain you've got. And I think for human beings, not giving up the potential gain is very difficult.
Well, Richard, I would say this particular experience taught me a lot. Yeah. And I have actually implemented a lot of the takeaways from this. So you'll see that over the course of the last year that I have sold, when companies have done very well, I've actually tended to take profits. Yeah. So for example, Rainbow Rare Earths, when the shares shot up and I doubled my money, I promptly sold it. And I think the difference is that I no longer go to the AGMs, and I no longer, the trouble is the management, all the incentives are to be just relentlessly positive.
Yes. And you constantly need to sense check. So we have our investment in ferrovanadium, don't we?
Yeah.
But one of the things we need to do there is we constantly need to check the vanadium price. We also need to constantly check what's going on in Kazakhstan in case the governmental or regulatory circumstances change. So you constantly have to be checking the assumptions that you make to see whether they're still valid, which is why you need people to disagree with you.
Absolutely. But also, whenever I get a credible source of critical information about a company, I absolutely listen to it. Yeah. And so when we talk about Sol Gold, you can argue whether they're right or not, but to me, everyone is relentlessly positive about companies. The moment I hear some negative news from a credible source, my thoughts are, I don't need to own this stock. There are lots of other stocks I could own. And this one, actually, I might be wrong.
Yes.
Because somebody who's done a lot more work than me doesn't think this is as good as the market does. And
Yeah.
frankly, get out. There are other opportunities. And right now, a private investor is preparing something for us critically on a UK oil producer that I hold. And he's due to send that to us, and I will be looking at it. And my inclination is very strongly to believe him, sight unseen.
Yeah.
We will be doing this, but I always listen to critical voices now.
Yeah, it's really, really important, Keith. You're absolutely right. Some very good lessons to have been brought to the fore by this talk. So thank you very much for sharing it with us, Keith.
That's right. Well, the thing is, Richard, I may be slow, but the lessons do actually sink in slowly. And I think the reason we do these My Worst Trades is to share these lessons with the audience so that hopefully they won't repeat our mistakes.
Yes. Although the best lesson is the one that you learn yourself. So if you do repeat our mistakes, only repeat it once.
Yeah, well, exactly. And on that note, I hope that everyone's enjoyed that, and some of you will feel tempted to come on and share your own experiences with us, which we've had a couple of people, William and Stuart, come on and share their worst trades with us, and in both cases they were fascinating. So I would urge any viewers to think of a trade which went wrong, which taught them some lessons, and to contact us at info@portfoliomatters.co.uk and come on and share it with the audience.
Great.
In the meantime, please can you press like and subscribe to the channel, and it's goodbye from Richard Wheater.
And it's goodbye from Keith Jordan. Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.